Good afternoon, everybody. It is 8/26 of 2010. The time happens to be 1:56 p.m. Pacific Standard Time, and basically almost 5 o'clock in Manhattan. And one of the things that we're going to talk about is the Double-Dip Recession. Now, back earlier in the year, we said that at the current earnings channel in equities, meaning that the current earnings trough, that double dip recession would be about 15% based on the earnings trough. So let's get that number one clear. Number two, now that we have actually baked the cake in the July quarter of those earnings hit their highs from the original lows of 2009. So when all the estimates were taken down from 2008 and got clear down to their very low estimates where they were going to relever, or the word releverage upward, meaning that the analyst had taken those estimates way down to where you couldn't help but make them. It's one of the things that Wall Street do. Welcome to some of the gimmicks on Wall Street. This is SMF Street. We give it to you straight, SMF Street traders and our investors worldwide. And so basically, having said that and been through a lot of that, this video is really going to show you what the monthly patterns were, once again, going back from the 1975 breakout from those lows. Then again, we had through that era, 76, 77, everybody remembers how inflation was. We consolidated for a number of years off of that bottom. 1, 2, and 3. Then we finally had the breakout to the 81 highs, because we did. The most important thing is that I want you to know that growth is growth and no growth is no growth. So back in those years, as I move this over for you, you can see here when things changed economically the right way back then in 82. We started off of the lows of that long multi-year consolidation off of these trading ranges. 1980, we had a nice up year. Then, you know, look what happened to the back half of 81 through 82. And basically, I'm saying that a double dip recession is going from 15% to 35%. The reason why I'm saying that, folks, SMF Street traders, especially our wonderful short sellers that love to make money when markets go down, and we specialize in all the bear funds that go along with everything. See, bear market ETFs. We've highlighted them. We've traded them live. We have shown you, we didn't tell you where to buy them or anything, but our SMF Street traders are online live every day, all day. And basically, we go through these videos and we archive them so that they can go back and where they were making money, and this side of the market is cheap. We already ran the bull cycle. We've already ran the stimulances. We've already ran all of the, you know, incentives that they came out with during the bottom of the crisis there, 2008, and they threw enough money in the system that you bought that GDP. You bought the numbers that would be headlines in the future, because the government ran its deficit up so high doing that, and it doesn't work and won't work. The thing about it is, markets are the most wonderful place to be. Because, you see, if I say that the chances of a double dip have increased significantly, we are experts in those economic indicators. And we have a system that deciphers them. And we even teach. We teach all people. Doesn't matter if you're a casual investor, you're handicapped to the market, you're handicapped to the gimmicks. Just like the professional fund managers are just as much of a victim, believe it or not, as you. And the thing about it is that using our system, Our system doesn't have an opinion, and it doesn't have a rating, and it deals with only one thing, the hardcore reality. And it deals with price failures, it deals with market failures, it deals with market successes too. And it also deals with when markets are made. And basically, we've already been covering these now for about 4 weeks, and we've been accumulating them. And basically, with the lower GDP growth, it's even going to be worse. So if GDP, like I said 9 months ago at the back end of the year, kind of like what happened here, 81. Look at that big back down year. And we still have room to go below the market. Then it got double bottom, and then we started moving. But that was a different time. That was the time that different government people were doing the right thing. And they were stimulating the small businesses. They were giving incentives here in this country. They were doing lots of things right to get that move. But today, folks, when I go back over here to this monthly chart where these breakouts happened off of the 1987 lows, right there, we made another great move. We had a big hiccup, but they came back in this crisis and this big sell-off, and we had a nice another move. And we were in a long-term bull market for equities. Year 2000 came around right here, and we went straight down in 2007. 2000 is right here. 2007 first. I want you to see the 2007 drop there, and then I want you to see this year. That's this year. 2001, 2002 had that big drop. This is the drop. It started here. And one of the things I'm going to tell our SMF Street traders is the reason why was that we were in a bubble and we had key reversals just like we do on this very day right now. And I will show that on the chart for the SMF Street traders and investors. The thing about it is, no market ever goes straight down. We put in the top there, but we failed and we made the lower low within the monthly trend because of that SMF bar right here. Half of that SMF trader bar, monthly bar, we went straight down, we tested it, could never get back above it. And it was all based on that bar. We came up, monthly failure. But here's the deal. 2002, and this is where the trends do these things in markets. And they even come back up, back in that volatility there, which markets don't go straight down. This was where all the news was pumped on how good it was going to be then. As we all remember what the 2000 bear market bubble was, and then where all the hope was. But then we made the all-time lower low at double bottom price action, and Bush got the Iraq war going, and off we went. Basically, what I would like to show here to the SMF Street traders is that a double-dip recession means one thing. This is the year of 2008. That's the straight down year, right here off of that monthly doji reversal. But here's the thing. All the economic stimulus, as I talked about earlier in the video, happened. They played their course. How nice that was again. And we went right up here. And we tested, once again, the SMF Pro Trader Street bar. One of the things that I want to make clear on this video to our SMF Street traders and our worldwide investors that are from different parts of the world and everyone watching, I want you guys to know to archive this video again, because it's going to be very important to you, just like we were doing back here with our traders here as to where this failure would be before the year started. This was the retracement of the stimulances that brought us to here. Corporate of America re-leveraged their balance sheets and Main Street got screwed. And, you know, I apologize for the people outside of our SMF Street traders on that word, but that's what happened. So don't take anything personal if you're watching a video. The thing about it is Main Street got the raw deal and Corporate of America got the greatest deal right here. and they rebalanced. When we were down here, we were at a collapse on the 2009 low. And all corporations, balance sheets, and everything was out of whack. You all know what the story is. You've lived through it. There was good money made off of that move. There was good money made when we shorted here. And we have to tell you now that this monthly bar right here is a lower high from this reversal of 2010, and we called that reversal back over here. That was your 3-month counter trend with the big reversal, and you're taking out the 10-month moving average, and the Dow is at big risk right here. This is at bottom. Now this is all about just this year. This year is not over. And one has to be positioned well, because what we're talking about is a double dip relative to the Dow Jones. And if we do have a double dip, that isn't all that bad, because maybe then they'll work out the system correctly and then turn around and be forced to stimulate the right parts of the American society and its capital structure. This is what we hope for you and the working man and woman in America, is that their quality and their standard of living does not have to deteriorate any further. High taxes, all of that will cause a double dip. And basically, the SMF Street traders on their Saturday and Sunday training sessions with me, we talk about this in depth. And we talk about how to position oneself, him or her, the people that are SMF MMTs, people that are on SMF Street, whether you're a U.S. trader or whether you're an international trader with SMF, doesn't matter. What does matter is that you're on the right side of the market. The investors don't like markets because it's a lack of knowledge for a lot of people, and it's a lack because there's so much crookedness out here in the world, and lots of things go on that shouldn't, and it's very hard for one to have the right education unless you're going through an educational process like this with SMF Street right now. We are going to tell you that if we double dip, the probability is 35%, up from 15%. We're going to take out those lows. We're going to take out this low over here. This is where the trend started at 84.45 is where the latter part of the 09 breakout cycle of this part of the monthly chart occurred. We have broken this trend right here. So let me draw this for you, SMF Street. That's the problem. Can't close above it. This month is not over. It's the lightest, one of the lightest months in the year. We have taken the GDP cycle down to 1.5% for this year, and possibly if they don't do the right thing and we go through all this tax crap and they don't get it right and things don't change, well, like we put out a video a couple of months ago called Dow 5000. And what I'm going to do is start another video, because this is going to be a special series on double-dip recession and where Dow Jones goes.